Hello and welcome to BQ Prime. A very good morning to all the viewers. You're watching Stocks in Focus, and I'm Retd. One company that we have been looking out for is a Garden Reach Shipbuilders. A 65% up move coming in the last 1 year, and that's the kind of returns that investors have made. Clearly, the second quarter numbers have also been absolutely strong. Let's welcome in Mr. PR Hari, CMD at Garden Reach Shipbuilders and Engineers to discuss more. Mr. Hari, good morning and welcome to the show.
Morning, Hiral. Very good morning to you.
Mr. Hari, firstly, congratulations on the strong set of numbers. Clearly, is this something that has met your internal expectations, number one, and are you expecting this kind of performance to continue?
Yes, our Q2 results have been definitely encouraging. And to be frank, 4 quarters on the trot, our financial performance has been on an upward trend. The Q2 results, both in terms of revenue from operations and the profit after tax, have been in the best in the history of the company, with the revenue from operations touching a new peak of 897 crores. That is showing a year-on-year growth of 32%, and the profit after tax registering 37% growth, touching 80.74 crores. Yes, these have been as per our expectations, and I'm very confident that considering the project execution level, we expect similar trend to follow in the coming quarters too.
Right. Now, from here on, overall, if you see in terms of the order book, where does it stand currently, and how much do you think you will be adding in the remainder of the financial year?
See, our current order book outstanding stands at 23,739.59 crores. These comprise of 4 naval projects. That is 4 projects for the Indian Navy, 3 P-17 Alpha frigates. The order book value remaining is around 13,000 plus crores. 4 survey vessel large with an order book value remaining around 1,290 crores. 8 anti-submarine shallow water craft with an order book outstanding of 5,300 crores, and 4 next generation ocean going patrol vessels with an order book outstanding of 3,400 crores. Of these, let us keep the ocean going patrol vessel apart, because the contract was concluded only on 30th of March this year. The other 3 projects are at a maturity level. I had mentioned around 13,000 crores are expected from the P-17 Alpha project. This is a 3-ship project, and as per the current production schedule, these ships are expected to be delivered between calendar year 25 and 26. That means the first ship we plan to deliver in mid of 2025, and the second ship mid of 2026. These 3 ships are currently at a stage of construction wherein maximum revenue accrual is expected in the coming years. That is this year, the next year, and the next year. Similarly, the survey vessel large project where we have around 1,200 crores remaining. The first of the 4 ships is planned to be delivered the next month, that is December 23, and every 6 months thereon, we'll be delivering 1 ship. So we intend completing this project during the next financial year. That is FY25. Coming to the anti-submarine shallow water craft project, as I had mentioned, we have around 5,300 crores remaining in the order book. And here the delivery will start from now onwards. The first ship is planned to be delivered during the last quarter of the current financial year. And thereafter, every 5 to 6 months, we'll be delivering 1 ship each. So to put it in a nutshell, the revenue recognition so far in the current financial year has been around 1,654 crores. And as I had mentioned earlier, we intend maintaining the same tempo in the coming quarters and also in the coming financial years. So we expect our best ever revenue so far in the current financial year, that is FY24, and we intend to break it in the next year and next year too.
Right. So, Mr. Hari, clearly, from the order book that the company has, that is absolutely, impressive. Now, if you have to look at the execution timeline of the same, how does that look like? And when do you think that the company will achieve peak revenues out of it? Because the last time we spoke, FY25 is what we were hearing. Where does that stack up?
It is more or less same. 23,739 crores balance as of now. And as per the present production timelines, including the new order that we received on the next generation ocean-going patrol vessel, these ongoing projects will be completed by FY28, with major chunk of it having been recognized. The revenue major chunk would be recognized in FY25 and 26. That is when the P17 Alpha project would be delivered, and also the ASW shallow water project, what we intend completing during FY27. So again, since you asked a question, which year would be our maximum revenue recognition year? It could be FY25 or 26. And also happy to inform that we have just won an order for the Ministry of Earth Sciences, the Government of India Ministry of Earth Sciences order for a construction of an oceanographic research vessel. The order value is around 840 crores. So our intent is that as the order book depletes through project execution, we intend filling up the order book kitty with new orders. We have made a right breakthrough with this order. And with both the Navy and the Coast Guard coming up with RFPs in the coming years, we expect that as our order book depletes, fresh orders would come in to fill this gap.
Correct. So in terms of the second quarter, how much was the execution like? Because if I remember correctly, first quarter execution stood at almost around 750 odd crores. Second quarter, where does it stand?
Second quarter, it is 897 crores.
Okay. And the other aspect is, you're saying that you will see a pipeline that will be built to fulfill the others once the revenues peak from FY25. How do you see that pipeline? Because that's one of the concerning areas that everyone is pointing towards, that, taking the execution capability that the company has into consideration, the future in terms of post FY25, there is uncertainty because we're not seeing that order book that is being built. So what is it that you're looking at in terms of filling that kind of an order book?
See, I mentioned in passing that both the Navy and the Coast Guard orders are on the anvil. Both of them have got very ambitious plans to expand their fleet capability and fleet strength. The Navy, let us take Navy first. Navy would be coming in with an RFP for the first, what I anticipate in our appreciation, would be an RFP for construction of 5 next generation survey vessels. This is a moderate cost. Order value would be moderate. It would be around 3,000 to 3,500 crores, followed by 21 waterjet FACs, which, of course, it's one of our niche products where we have delivered over 33 to both the Navy and the Coast Guard, followed again by the next generation corvettes. This is a high value order. The AON was accorded by the Defense Acquisition Council during mid-2022. As per the DPP procurement timelines, we expect the RFP to come out during the latter half of the next financial year. That means, to be realistic, the RFP could come out between June to December 2024. This is a high-value, big-ticket item, and this is where we would be focusing on because, again, corvettes in India for the Indian Navy, currently 9 corvettes are in operation, and all 9, both the missile and anti-submarine, have been built by GRSE. So we have that kind of captive experience and expertise. So this is an order that we will be looking forward to. As I mentioned, the total order value is likely to be to the tune of 36,000 crores. And this is for 8 ships, 5 by the L1 shipyard and 3 by the L2 shipyard. In addition to that, Navy is also looking at the P17 Bravo. That is a follow-on of the existing P17 Alpha that we and MDL are executing. And this order value could be to the tune, at that point of time, could be the tune of 10,000 per ship. That is maybe around 70,000 crores. Navy is also looking at the next generation destroyers, which initially could be in 2 tranches of 4+4. The initial lot could come up in the next 3 to 5 years. So Coast Guard have their own for 18 next generation fast patrol vessels and so on. DAC has recently given an approval for 12 number mine countermeasure vessels for an AON cost of 32,000 crores. So to put it again in a nutshell, the orders on the anvil are adequate to meet our aspirations and also the aspirations of our counterparts, the other shipyards. So as the order book depletes, we expect the RFPs, if they start coming in from the next year beginning onwards, they will get translated into contracts maybe a year down the line. So by the time our projects finish, we would be getting adequate to fill the gap. Second, in addition, this I was speaking about domestic worship building. Second, we are also focusing on exports, which is again a government mandate and a focus area. We are giving impetus to areas, that is geographical regions, which has got huge market potential. Now, the commercial shipbuilding segment has opened up at this juncture. There are various companies are showing interest, and they're looking at India. So here again, we find adequate orders coming in hopefully I'll be able, next time when we interact, I'll be able to give you some good news. So we are expecting orders in this segment with our focus areas being the Caribbean. We already made a breakthrough here with Guyana by providing them an ocean-going passenger vessel. This is an area where we are focusing the Middle East and the Scandinavian countries. And of course, our neighbors, friendly neighbors, Bangladesh, Sri Lanka, and Maldives.
Okay.
So there are opportunities available, and we are fully geared up to meet these opportunities.
Okay. So my key question on this one is, on a yearly basis, right, from an order book perspective, what is that average that the company is looking to maintain? Currently, when we say that the company is sitting on an order book of 24,000 odd crores, is that something every year the company will be able to maintain on an average?
No, ma'am. That is in shipbuilding. The philosophy is totally different. Various ships are at various stages of construction. The revenue accrual peaks when a ship is under construction from 40 to 60% of physical progress. That is where the equipment, and in case of equipment and major material, go into a ship. And equipment cost alone forms around 60 to 65% of a total order. Now, why I'm confident when I'm stating that FY 24, 25, 26 will be the peak years is that is when our big ticket product, that is a P17 Alpha, will be reaching that stage. The first ship is just about touching 60%. The second ship has reached 50%. The third ship is entering into that bracket. So it will not be since you asked me a question that the 24,000 crore order next up to FY 28 we are planning execution. It cannot be divided equally among the next 5 or 6 financial years. There will be a peak time when the equipment go in where maximum revenue accrual takes place. And in our expectation, as per the current build schedule, that is going to start from this year. We already touched for information, the current financial year, we already crossed 1,654 crores revenue. So if you're maintaining the same tempo, we can expect good results during the current financial year. The next year and the next year, that is FY 25 and 26 would follow suit.
Right. My last question coming to you is, if you have to look at the capacity that is available right now, what's the spare capacity, number one? And two, where do you see concerns specifically from the margin volatility that could emerge? How are you looking at both of these aspects?
Coming to the capacity, as per the stated capacity, we have the capability to construct 20 ships concurrently. 20 ships as in 8 large vessels and 12 small or medium-sized ships. In addition, we are currently in the process of, we have taken over a facility from the Central Inland Water Transportation sometime back. To meet the needs at that point of time, we had only revitalized a certain element of this capability. And now we are focusing on revitalizing the balance of the assets. Assets as in case of shipbuilding, the most key assets are the building docks and the dry docks, that is building berths and dry docks. So here we are focusing on that. And this is I'm talking about the captive capability. Second, we have taken over 3 dry docks from the Kolkata Port Trust, where we are currently focusing on ship repairs. But these, in case we get additional shipbuilding orders, these also can be used for shipbuilding. They are dry docks. In addition, we have adopted a business strategy where we go in for utilization of the spare capacity of capable private shipyards. This is a force multiplier because one, we can facilitate concurrent construction, and this is very much in line with the government thrust on focusing on PPP, that is public-private partnership model. So to again, one, captive capacity, currently existing 20 ships, our efforts to augment the captive capacity for revitalization of some of the facilities. Third, through hiring of docks on long term, that's we have got it on 15 years plus another 15 years from the Kolkata Port Trust. And fourth, through PPP model. So capacity and capability wise, there is no dearth one, to execute the current projects, and second, to meet the requirements that are likely to come up in the future.
Right. So these are a few aspects we should be looking at as well. Thank you, Mr. Hari, so much for joining us on the show and sharing the views. This is one of the industries which is seeing a good up move currently as well, not only from the stock price perspective, but with the kind of orders that are flowing in as well. And hopefully the company is able to maintain these kind of levels. That's all that we have on this session. Thanks for watching. And lots more lined up on the other side. Please stay